Hey guys, I'm here with Chris McLeod from Your Commercial, who is managing our commercial assets, so the childcare and swim school. So I just wanted to do a bit of a quick session with Chris. If you are interested in investing in any of our assets and more particular the Morayfield childcare and swim school, and just getting Chris on, letting everyone know what his expertise is. So he spent the last 25 years as a commercial agent, both selling and leasing. I won't steal Chris's thunder. I'll hand it over to him. And Chris, just give us a rundown on what your area of expertise is, how long you and I have been talking, been working together, and I suppose what is so good about you versus me managing the asset or anyone else for that matter.
Thanks, Adam. Yes, I've been in the industry for 25 years. I come from a hospitality background. Customer service is exactly what I instill in our staff. We always look after our customers. We're like a hotel, but we are in the property sector. We believe in giving good customer service, which gives our owners good feedback and keeps their tenants happy and keeps them there in their building longer. I've been doing 25 years around the valley. I've worked in hospitality. I've worked in projects. I've worked on large, bulky goods centres. I've been focused in this area, in the valley area, for the last 25 years. I do a lot of private stuff for owners, finding them properties, and also doing developments up and down the coast. We have quite a few. We've got a couple childcare centres that we manage.
Yep.
We have over 100 properties that we manage in our portfolio, where we look for quality. We don't look for quantity. We look for customer service, and we look after our clients. And our main clients are our owners.
Yeah, awesome. I can vouch for you on that one, Chris. All the years we've been talking, which we were just saying it might have been 7, 10 years, we're not quite
Yeah,
sure how long.
yes, definitely. Yeah.
All those years we've been talking, and Chris has been seeing various different projects get stalled for a number of years. So, it's
Yep.
good to see some being finished.
They're all coming to the long term now, and they're happening. It's good to see.
Yeah. So, I mean, me vouching for you as an operator and being well respected around Brisbane. And for those people that don't know, the valley is Fortitude Valley, basically in the city.
Yeah,
If you are
sorry.
in the state, just thought I'd add that one in there.
Yeah.
So
It's a
you spent
very,
25. Oh, sorry, you go.
it's a very big area. Like, we've gone from industrial units now to residential development sites. So it's had a very big change over the last 20
Yeah.
years. So we've gone from retail to industrial, and now we're going back into residential.
Yeah, that's interesting. And probably a few more childcares coming up maybe on the
Yeah.
books
Yeah.
as well. Now that's going to be the flavor of the next 5 years, I think, back into
Yeah.
that cycle. So you've personally been in commercial real estate for 25 years. You
Yeah.
founded your commercial something like 15 years
7
ago.
years, 7 years ago.
Okay, 7 years ago.
Yeah.
Okay. And
Yeah. And
you've
it was
all,
just a need for my clients, and my clients wanted a company that I was with. So I started up Your Commercial, and we've just grown since then.
okay.
So we do the whole lot. We do the leasing, we do the sales, and we do property management. So
Yeah,
we do
cool.
like to go out and find our clients that a property to buy, and then we help them out to make sure it's a profitable property. And we do talk to people a lot of. We do get into the talking to owners about their properties, and is it a good investment if it's not a good investment. So
Yeah.
I love
Well,
doing
let's
that.
so let's talk about that, and in particular the childcare centres. And I'm going to pick on Morayfield because that's the one
Yeah,
we're at the moment. Because I do have another couple of other childcare centres in the pipe, being almost finished, and which you're managing as well, and about to start construction. So on that like risk profile, you've seen the cycles with commercial properties, and now you're talking about how it's cycling back to different asset classes. Where do you think childcare sits in that risk profile? Because people are looking at things online and I see them pop up on my feed. It's like office space, 8% return,
Yeah.
Brisbane CBD or whatever other CBD. And how do you see that? Because it's a really high return, whereas childcare, it's been quite stable. It hasn't really had the massive blowover with interest rate rises. They've probably, most childcares have really only peaked at high 5%
Yeah.
cap rates, maybe six, maybe a bit higher if they're regional. Where do you see that in the risk profile? Why are people only buying childcares or buying childcares at 5 or 5.25% versus getting into office at 8 or even sometimes higher?
It's to me, it's the bigger picture. They're a longer term lease. They're good covenants. They're a need in the area. People, a good operator will be able to fill the centres and keep the children coming to the centre.
Yep.
To me, they're normally good locations. They've got growth corridors, so they're quite good and stable. And once they're up and running and they're running correctly, they're a very stable tenancy. Like our childcare centres that we run do run very easily and manage. We keep them happy. Like they're always happy with what we're offering, and they're always running well.
Okay, so in that risk profile, what's the risk for a childcare centre, say, in your opinion? This isn't financial advice, by the way, for people that
Yeah,
are
I hope
listening.
not.
But but Chris has spent this long in the commercial market. He's seen different cycles. I've spent a little bit of time in the market, but I'm not, finger on the pulse as much as Chris. What are the main risks that you see with the childcare centre? And then if somebody's looking at another commercial asset, and I'm going to pick on office again, if they're looking at those really high returns in the office space, what could be the downside to them or people trying to go after an 8 or 9% return?
Well, it all comes back to the lease tail and how long. Like in
Yep.
office, they normally average 3 to 5 years.
Yep.
So a worst case scenario when you're buying commercial property, I always say to my investors that if that comes vacant in 2 years' time, you've got to allow for at least 6 to 9 months to a year of rental income that you're not going to get. And
Wow.
that all comes back to having vacant time, trying to then when you find a tenant, doing some fit out, giving some rent free, your agent fees on top, your lawyer's fees on top, normally works out to 9 months if you can get them leased up in the first 3 months. But mate, there's commercial
Wow.
properties, especially in the city, that are still vacant after a year, 2 years.
Yeah.
So it's the lease term is what you got to look at. And sometimes I turn around to my investors and say, not getting the extra $10 could keep your tenant there for a lot longer, for another 2 to 3 years. So it's always making sure it's the lease tail that I always look at. And
Yeah.
are they able to pay the rent?
Yeah.
Are they a strong covenant that they can pay the rent? And how can they pay the rent? Like with childcare, you've got many opportunities, many kids walking in there, and that's where
The
it is.
government pays for it all anyway.
Well, it does,
The
but
government's paying.
it's like not one person that you're relying on paying the bill. There's
Yeah, that's true.
a lot of kids walking in there, and that fills it.
A lot of
So
families. Yep. Yeah, very true. So I suppose with the lease tail, and this is one aspect of the commercial market that I saw as well, even getting into childcare a number of years ago. I've seen commercial buildings sit vacant for long extended periods of time, and it's a really high risk when they are vacant, or it can be, because you got like a year you're expecting income, or if it's
yeah,
2 years, and then exactly what you said, you got agent fees. What's a typical agent fee? 15 to 17%.
15%. Yeah,
Yeah, so
on the first year's rent.
15% on the first year to release it. And then if you got to do a fit out, so that
Yeah,
might all well be and good. You can refurb the building, but what's the capital outlay to do the fit out? And if you own that building, you have to find the cash to do the fit out.
yeah,
So personally, I know when we looked at office space in the city, we had so much to choose from. That was B grade office space, so much to choose from, and they were all fitted out. And the big funds had spent millions fitting out these buildings. to try and
Yes.
attract new tenants, and they were offering huge incentives. And that was however many years ago. That was pre-COVID.
Still
And I
the
never,
same now.
oh, it'd probably be worse now, wouldn't it?
Yeah, it's about the same. It's
Yeah, right.
changed
Okay.
a little bit, but yeah,
Yeah, a lot of incentives and very sharp rents. And they were only, I could get away with 3-year lease.
yeah,
So I suppose it's the one chasing that, you might be promised an 8 or 9% yield, but how real is that once you start to account for those periods where it's vacant? Is it going to be, are you going to be getting 5 or 6% anyway, but you're going to be mucking around with the building?
yes,
Um,
yeah,
so yeah, what do you think the advantage is owning a commercial building as an individual or under a company where there's one party basically owning one property versus doing a syndicate? You see that there's obviously advantages and disadvantages for both, but
yeah,
let's just focus on if an investor wants to buy a single commercial asset, and let's
yeah.
just pick a childcare. So
It
an
gives you the
entry,
good opportunity to put your feet into the pool and see what it's about. You there?
hang on.
You there?
Yeah, we just cut out again. I have a feeling it's my internet. Say that again. Just start that sentence. We'll cut that bit out again.
Yeah. Um, Mate, it's giving an opportunity for an investor to really see how it all runs and getting involved in it without too much overlay, too much cost, or having all your eggs in one basket.
Yeah.
Um, to me, you normally see people once they've done it once, they do it twice, and they'll just keep building on it.
Okay.
And then in time they might go and do their own. But really, when I did it, it gives you the opportunity to not worry about the asset, let someone else control and run the asset for you who is a professional. And then you just get that check at the end of the month. And you're not worried about have they paid their rent? Why haven't they paid their rent and chasing them up? So, but you shouldn't have that problem with the childcare centre because
Yeah.
they're always on time. So
Yeah, that's true. I suppose the biggest point is if you were to get into that asset class, so like something that does have a 15 or 20-year lease, um, and it's say government funded or the tenant has a lot of capacity to pay, the entry level into that market is high. Like you're looking at, if it's
yeah,
childcare, minimum it's 5 to 6 million now for a
yeah,
childcare.
yeah,
Unless you're buying regional. Actually, that probably is regional to be fair.
yeah.
So, you're buying a $10 million asset. So it's if you've got that money to outlay, that's a big chunk, unless it's just chump change for you. But that is a fairly big asset and it's considerable. So
Yeah. But most of those people, mate, have had a lot of experience, have sold a business or run businesses, and they're able to do that. Like, really, this gives everyone an opportunity to put some money away to an easy asset class, which they know it's got long-term
yeah,
advantages to it.
it's just spreading your risk pretty
Yep.
much. That's how I
Yeah.
see it.
Yeah. Definitely.
So
Definitely.
what's a good news or let's go bad news story first. If and we kind of touched on it. What's a bad news story that you've seen? Not that I want to scare people, but just sort of give a bit of a reality check because I know there's other things in the market where people are pumping rates and they're like, promising returns and investors are looking at buying, an asset themselves that might have a 7 or 8% return, but it's regional and it's only got 2-year lease left on it. And it's like, from my perspective, unless the person really knows what they're doing and they're prepared for that risk, it's kind of like trying to stop them from the train wreck if they
Yeah.
think that they're just going to buy it and it's going to be purely passive because it's not. So give us like a bad news story and then, give us a good news story on somebody buying their own commercial if you can think of anything off the cuff. I'll put you on the spot.
Yeah, mate, the biggest thing I see is owners going, I want an 8% yield or a 10% yield,
Yeah.
and they go out to the country and they buy a property out there and it's
Okay.
got a 2-year lease left on it. And then you go, okay, what happens if it goes vacant?
Yeah.
And why is the main street in that town got 10 vacancies? And how
Yeah.
are you going to fill that up? Are you going out there personally, or are you just letting the local agent try to lease it up? Um, and and the other big question I see with people is they're looking at an investment and it's the rent. Like the rent's inflated because
Oh,
they've given a
yes.
large incentive to
Yeah.
someone and they got a big price on it. It's like, well, this is what the real rent should be.
Yeah.
Um,
Yeah.
and that's where it's at. When you're buying property, you've got to be in good growth areas. Where's the growth? And
Yeah.
being
And
able to
when you
find
say growth, you mean population growth. So
population growth areas, or even just like Valley or West End is a great example. Like you've got to have the money to buy the property, but you're not getting the yield today for that. It's a longer term play as an investment as a development site. Like you're getting when you're trying to get a longer term lease and
yeah.
you're looking for a longer term lease, you're not getting great yield. You're only getting 4 or 5% yield on it. So when you're getting something that gives you a better percentage, then and you're
Yeah.
not putting the outlay, you're not fixing it, you're not doing it yourself, you're not getting the lease, you're not building it. Um, to me, that's a really good, easy way to get in there and feel the market, see what's happening, and learn from
Yeah.
what happens over the next 6 months to a year, couple of years, and then you can keep putting more money in or looking at another asset to go into. So you
Yeah.
can put your eggs in
Uh,
different
the,
baskets.
the reality is something on that lower risk, you're like 4 or 5%. Like,
Yeah, yeah,
and if you want to take an element of risk, then you can chase the maybe sevens, eights, or nines.
yeah.
Um, but that might end up dwindling back if you have periods of vacancy.
You normally see it over a period of 5 years, and they've had only a 2 year of great 10%. Then you
Really?
know it's coming. Then you know it's coming back if it goes vacant. It's
Yeah,
about trying
wow.
to keep the tenant there. And a lot of times I say to owners, you've got to buy the tenant. You got to keep your tenant there. Now you have to drop your rent to get it to
Wow.
keep them
Yeah.
there, and it happens. It happens quite a bit out there,
Yeah, okay.
especially
So
with
a
the
bit of a
new one.
reality check,
Yeah,
which I know you and I know that. Well, you more so than
yeah,
me. I just see it on the outside.
yeah.
But for the average person, we don't really see, I mean, most people aren't going to see the incentives from the start of the lease,
No,
and all that stuff. So, um, all right, that's pretty much it, really. If anyone's got any additional questions for myself or Chris on the investment or anything that we've spoken about tonight, let us know. Chris, is there anything that you want to add for people looking at investing into any commercial, not just the childcare, but just commercial in general?
I just look at the rent that you're getting. Look at the tenancy. How good's the covenant of that person of that group or person? How
Yeah.
long's the lease? What's the upside on the piece of land or around the area that's going to happen for your area? And then if you need any, if you've got any questions, you're looking at buying a property and you want to talk to me, I'm happy to have a chat.
Yeah. But otherwise, just invest into the syndicate, which Chris is managing
Yes. Yep,
anyway.
definitely. The syndicate's a great way to start and to get involved in it. And even if you're a person who has got in other syndicates, this is a good way to get into a good asset, a good
Yeah.
asset.
Have you ever seen, just on that, have you ever seen a childcare in a syndicate? I haven't for 6 years, I reckon. That was the last
No,
one I saw. I probably haven't seen a childcare syndicate for, yeah, it must be 6 or 7 years.
no. Most of our childcare centres are bought by
One
one or
person.
two people, and
Yeah.
that's it. Or they're just a straight investor who's
Yeah,
bought
that's what
them.
I've seen.
So,
So I think it's really great that we actually have the opportunity to do a syndicate on an asset that isn't very typical, that I know a lot of people want to get into. And it's probably the reason why we've had a lot of interest just in the last couple of weeks since we pretty much launched the express of interest,
yeah,
um, is because nobody else has got it, which is great for me.
yeah.
And hopefully it all works out well
They're
for
getting a
everyone.
good return. They're getting a good return. So, and that's the key is
And
making
and the
sense.
capital growth as
Yeah,
well, which you touched on
yeah,
around. because the rents are going up every year. We're
Yeah.
not relying on some fake rent that is incentivized in 5 years' time because the lease is expiring. It's real rent that's going to keep going up every year for the
Yeah.
next 20 years. So it's
The,
bankable.
and the bill costs in 5 years are going to be a lot more now
Oh, so
than there
much.
is now.
Even even now, the childcare center that I'm about to lease makes the Morayfield one. So the Morayfield lease is 555 net. What I'm signing the new lease at would make Morayfield's rent close to 700,000 a year.
Yeah.
Just from that's what the market's paying now. But they
Yeah.
have to because the land plus the build has gone up so much, even in the last couple of years, that
Yeah.
tenants have to pay that much more to make the project viable. So
Yes.
all the new childcare is coming online. So that one's 120 place center. So it's going to have the same value, like that 10 million valuation, as the 150 place center.
Yeah.
That just like that's inflation right there.
Yeah.
So smaller center, same value. So what it's going to mean for the bigger centers is when they go to sell, the plan is to sell this after 4 or 5 years or 4 to 6 years. So at that point in time, it's going to look very cheap compared to other centers. And it's likely that it's going to demand a better yield, a better cap rate. So value will be higher
Yeah.
based on the rent we're receiving because there's going to be other ones come to market that are going to be, 15 million, for example,
Yeah.
and it's the same size center.
Yeah.
Whereas, ours is at 10. I'm over exaggerating there, but you get the idea. And as the land value increases over time and as the build prices continue to climb, that's just going to get worse and worse. Or, the tenants have to keep paying more rent.
Definitely.
Otherwise, they're not going to get new centers. And
Yeah.
unfortunately, the person that pays at the end is the government because
Yeah.
they're subsidizing childcare fees. So luckily they can in this instance, but for most or for a lot of commercial properties, the tenant is like a business, and they may not have the government that's the prices keep going up. So the rents are capped. And I know you've seen that well, I've seen it with shopping centers, office to an extent, where the rents are capped at a level because the tenants can't afford to pay any more than that.
Yes. No. They do hit that bench and just go, can't do anymore. So, yeah.
Yeah. All right. Thanks so much, Chris. Really appreciate it.
Thank
And any
you.
questions, let myself or Chris know.
Okay. Thank you. Good night.